Welcome to another episode of Copper Bottomed. It's now the middle of March, and I am coming back to Copper Bottomed after a 2-month hiatus. I did the last one in the middle of December, just before Christmas. And in many ways, it feels as if the copper market has improved. The copper price has strengthened a bit, but not a huge amount. I mean, it was hovering around $4 a pound, and it's now around kind of $4.20, $4.30. You can see that in this copper price here. I've updated it. I think I last updated this about a week ago. And again, you can see here in this, when I put the gold price next to it, you can see the gold price continuing to outperform relative to copper. And then, of course, I've got this long run chart, which I like to show, which is the real copper price rebased in terms of gold, with gold as a proxy for real money, as in the US dollar is being depreciated by all of this monetary printing. And this chart here really shows the LME copper stocks from the beginning of January 2024 through to the end of the year. And what you can see is stocks were being pulled down, and that coincided with the metal price rising to its peak in the middle of May or the end of May. And then as the financial trade in copper was unwound and copper stocks started to rise in warehouses, so the price came down as well. And we've had this pretty, the second half of last year was a pretty torrid time in the resources sector. Copper was out of fashion. I come back to this. Gold was in fashion. But as of the start of this year, in fact, probably post the Trump election on the 20th of January, copper is back in favor, as is gold. So it's kind of game on in terms of the capital markets. And I know that from personal experience, just because the way that the financing for the Fitzroy Minerals acquisition of Ptolemy Mining has gone, suddenly it's a very different toned conversation. Right, so let's get into Copper Bottomed for this year. Sorry, for this this session. Here we are in the middle of February, and we've had, I know this is a really busy slide, but we've had updates from all of the major companies. I've just picked out a kind of a selection here. BHP reported, okay, so BHP is on its financial year end is in the middle of the calendar year, so we've just had the half-year results. And talking about copper, they said they had a strong performance. Production increased 10%, driven by a 22% increase at Escondida. And of course, what that shows you is that, yes, Escondida rose by 22%, but everything else fell. So Pampa Norte in Chile, Copper South Australia, and Antamina, their copper production was down there. Just to reiterate, Escondida is an absolute beast. I mean, it's a monster. Look, they're predicting around 1.2 million tons of copper production from Escondida. But of course, that is not all going to BHP, because BHP owns 57.5%. Oops. Rio Tinto owns 30%, and this Japanese consortium owns 12.5%, including Mitsubishi and JX Nippon Mining and Metals. BHP go on to say in their outlook, and when they're talking about growth, they say that in January 2025, they formed the formation of Vicuña Corporation, a 50-50 JV with Lundin Mining to develop Filo del Sol and Josemaria copper projects. Josemaria is, of course, much closer dated than Filo, which is still at the very early study stage, if indeed they've got any economic studies out, whether it's just resources, but they're still drilling there. Total cash completion payment was $2 billion. So they paid up for the long-term growth pipeline. And in their November Chilean copper site tour, they were talking about the low capital intensity options in both concentrator and leaching pathways. And really what that means is that they are not pulling the trigger or pushing the go button on any new build. What they're talking about is debottlenecking on existing production, and they are looking at processing the sulfides, which they couldn't get at in terms of metallurgy, or the low-grade ores, which they couldn't get at in terms of recoveries through leaching. So really, this is just brownfields production that they're looking for. Remember, these guys, even though they spent $2 billion buying future production, they're not putting hard money into building out new projects at the moment. Okay, so that's one thing to remember. And I think everybody is looking at Teck because they are doing this expansion at Quebrada Blanca. As I've commented in the past, it's gone up from $2-point-something billion to $8.8 billion. I mean, the capex blow up on it has been enormous. And what does it get you? Well, if you look for Teck, if they look at their guidance, their total tonnage, what they were actually looking for in 2024, this is what they got, 446. They're guiding towards 490 to 500. So Quebrada Blanca will continue to come on. They're going to hopefully get another kind of 30,000 to 50,000 tons from Quebrada Blanca. Hopefully another 30,000 to 30 to 40,000 tons from Highland Valley. Antamina looks if it's kind of got a slightly weaker year. Maybe that's a pre-stripping or metallurgy issue. And Andacollo, Carmen de Andacollo, incremental increase there, maybe 10% increase. So a small increase from 24 to 25. But look at this, 3 years out, and they are production falls off again. So they're going down from 530 to 600. They're dropping that by quite a chunk, 75,000 ton kind of shortfall in 2028. And this is, of course, just when all of the demand from AI, from EVs, from electrification, everything is kind of supposed to be kicking in. So even the big guys struggle to find new production and to maintain output. Then we come to someone like Rio Tinto, and they produced almost 700,000 tons of copper in 2024, which was an increase from 2023 thanks to Oyu Tolgoi Underground and Escondida. So they get the benefit of the Escondida expansion, and it offsets geotechnical challenges at Kennecott. That's good growth, but can it be sustained? Okay, another interesting thing that they deem material to put into their annual guidance. Remember, I've just picked out the bits on copper, but this was included in iron ore and all of the other stuff. They said that they've signed a term sheet with Sumitomo to deliver the Winu copper gold project in Western Australia. They'll continue to develop and operate as managing partner, and Sumitomo will pay $195 million upfront and contribute $204 million in deferred consideration, and then pay pro rata. They haven't yet formalized the broader strategic partnership, but effectively it was a $254 million US acquisition of 30%, which, you can put that back so you can say, well, roughly this whole thing's worth about $750 or $800 million. Winu, it's got a kind of an NPV or a kind of value of about $800 million, and that's what you're paying to get into. That's what Sumitomo was willing to pay to get into at the PEA stage, really, because they're looking to do a PFS in 2025, and they talk about doing 10 million tons per annum. Now, if you go to the resources, which is easily done, if you click on there, you click through a few things, and you can find the reserve statement or the resource statement, and their grand total is they've got 600 million tons in a combination of different categories: indicated, inferred, supergene, and hypergene, at 0.4% copper and 0.3 grams gold. Now, when I assumed between an 80 and 85 recovery, 80 and 85% recovery, it spits out at 10 million tons per annum, 32 to 34,000 tons per annum of copper and around 80,000 ounces of gold. And so this is an $800 million project years before production. So you've got to discount the future, and it's going to produce 33,000 tons of copper and 80,000 ounces of gold. So it just shows you how valuable copper production is and how difficult it is to get, because Rio Tinto, the giant that it is talking about this as a material asset. So, and then you come back to the Chilean projects, whether it's Quebrada Blanca or Escondida. These are the big boys. So remember these reference points when we go through the kind of exploration results. And it brings me on to Capstone Copper. Now, Capstone Copper, it was this kind of this new company created by picking up the some of the Anglo stuff, some of the coastal projects, and over the last 5 years, it's given this extraordinary return. I mean, it's if you invested $1,000 5 years ago, you would have $10,000 and your original $1,000 stake. So this is the what you'd get back if you'd sold your position now. I mean, it's the classic 10-bagger. Having said that, the share price has barely moved. In fact, it's actually come down in the last 12 months, more or less. So it's on a kind of a consolidation phase, and it's got a value of $6.5 billion. So a company which is worth $6.5 billion with growth forecasts and kind of resources and all of that good stuff going off into the future, it produced 184,000 tons of copper in 2024. So that just should put you into perspective. So if you can produce 15, 20, 30,000 tons of super low cost, low capex production through an oxide in the Chilean coastal belt, which is where I'm sitting with my kind of the Fitzroy Minerals hat and the kind of the Buen Retiro asset, because that's the kind of thing that we'd be looking at, it's valuable. And then you also look at where they're going to. So they say copper production in 2024 was 184,000 tons, and they're forecasting 2025 220 to 255,000 tons of copper. So that's a healthy increase in production. Now, this is slide 6 from their presentation, and it shows that they put their future near-term growth at 280,000 tons. So obviously not 2025, it must be a bit further out. So they're talking kind of about some considerable growth. That's 30% more or less to get from 2024 to this near-term growth figure. And then they talk about 400,000 tons as a longer-term vision through the development of the Santo Domingo complex. Now, if you go onto their website, they've got a fantastic video of the Santo Domingo project that they're looking to find partners for. And in fact, John McKenzie comes on to say this. He goes, meanwhile, we also plan to continue progressing financing and partnership discussions at our fully permitted Santo Domingo project. What they're working on here, well, while in parallel advancing opportunities to incorporate the recently acquired Sierra Norte project and Santo Domingo's oxide material into the mine plan. So there are oxides at Santo Domingo sitting on top of the sulfides, and they're trying to get that into the mine plan. They've got this nice video. It's kind of a 7.5-minute video, shorter if you put it on a slightly faster play speed, which is worth looking at that development because it's quite close to the Monteverde project. You can see here, this is the expansion that's kind of going to come from Monteverde. That's where the growth is. Capstone launched this sales process in the summer of last year. I can't remember whether it was July or August. And here we are 8 months later. And what I'm hearing is that none of the majors are really biting at a big capital investment to start production now. And it comes back to the cost inflation and the hassles that we've seen, or that Teck has seen at Quebrada Blanca too. And in a sense, what I'm feeling and what I'm hearing from the market is that the majors are looking to see where the dust settles on QB2. And I was speaking to another trusted source in the market who said to me that he just doesn't feel that the majors or the larger companies have got the, what was the word to use, the visceral fortitude to pull the trigger on a new greenfields $1 billion or $2 billion spend. It's just the margins aren't there. So people are positioning themselves, and in the last copper bottom that I did, I went through all of the strategic investments made by larger companies into smaller companies, but they're not pulling the trigger yet on greenfields builds of 1 billion tons or so. Slight departure from the way that I've done copper bottom before. I realized that there've been lots of news over the course of the year, and I found on the Mining Hub this nice summary. You can search on Mining Hub now. You can search your date window, and you can put your cutoff. And I said, really, that it was probably worth looking at drill intersections of 30% factors. So the grade width of 30 and above. And I just hit the time period from the middle of December, and you can see that I've got about 4 pages to go through. So I didn't have, it actually took quite a lot of time. It's a really good exercise for me to take the time to see who's discovering what and what's driving their share price. So, and this is ranked by the grade width factor. So the best result, Lunawassy, the smart boys at NGX. Market capitalization $2.5 billion. The share price has gone up 75% in 1 year. Jim Slater, the legendary British investor, he always used to say the elephants don't gallop, but I think this is proving that elephants do gallop. And if you've ever spent time on safari in Africa, I think you can find that elephants do occasionally gallop, and it's pretty scary when it happens. But NGX, of course, is a fan favorite, and it reminds me that you don't always have to, in a beauty parade, you don't have to pick the most beautiful person. You have to pick the one that the crowd thinks is the most beautiful. So this is absolutely a fan favorite. Stellar intersection, $2.5 billion. Should continue to go up. You've got to be comfortable with Argentina and take a long-term view there. When I speak to my Chilean lawyers, they say don't trust Argentina, but they've been bitten too many times. Long-term contracts with Argentina producing Chile have been torn up in terms of things like electrical offtake and infrastructure projects. So the Chileans don't necessarily trust Argentina, but the market seems to at the moment, which is great for NGX. Right. The next best intersection is Element 29 Resources. All of these companies going for the atomic number of their metal. I mean, I guess it's better than calling it copper, element copper, but not much. It doesn't really show much imagination. Never mind, they have got a good intersection and they have had a good year. They're in Peru, which can be incredibly difficult if you are not in the right part, and conditions can change. However, you can, of course, make excellent progress in Peru, and they seem to be doing that. So I didn't get a chance to really go into their news release, but look at that. It's more than a kilometer of 0.39% copper, 360 ppm moly, and 3 ppm silver. So, I mean, that's a huge, huge intersection, and they're in phase 3 drilling. So there's going to be many more results coming from there. Libero Copper in Colombia, low grade, big intersection, but Colombia, the market doesn't believe it. I'm not a fan of, Colombia's too tough. Move on to ATEX. Ben Pullinger and the crew are doing a fantastic job. The share price continues to strengthen. I've liked this ever since the early porphyry intercepts of February last year. They're now in phase 5 drilling. They've got 5 rigs on the ground. They've got Agnico Eagle in there. They've got $55 million in cash. They're on a roll. The grades, the latest grades of the this kind of high grade section, it comes closer to the surface. $600 million market cap. When I started recommending it last year, it was $200 million market cap. So we've had a really good share price return, but we've also had an expansion in the share capital, but that's fine because they've got cash and they can turn it into resources. And the other thing to remember is that they're operating at 4,000 meters, drill meters up there about $1,000 a meter or more, where Fitzroy's working down on the coastal plain for the Buen Retiro project. It's $130 a meter, and we've just drilled the Caballos project right through a fault gouge. We needed to do HQ core, the kind of the fatter diameter core, and that was at $200 a meter. So it really matters where you are in terms of altitude, in terms of your cost. But despite that, ATEX with their good geological model and the good intercepts they're getting, even if your hole does cost $1 million, it's worth it because you're adding more value per hole. Right, next, over to Kazakhstan. Again, in this wild and wacky world that we live in, you've got to be comfortable with your geopolitical risks, whether that's you see China or Russia as a threat. That's up to you. But at $73 million, Aras has had a cracking year. Share price kind of up 4 times, so you're locking in kind of a 290% gain. They got Teck in there at 9%. They did have this advanced asset-based cargo, but it's kind of, now that's old story. It's way down in the presentation, and it's Boriski, Amundai, and Tai, which are the three projects coming through. And that's a really great intercept from 14 meters. I mean, look at that, 500 meters at 0.7. Extraordinary, really good. NGX we've done. Peel Mining I had a quick look at because they got this good result, 119 meters at 3%. Aussie company, small advanced resource, regional exploration, so they're kind of looking all over the place. DLP, classic DLP, huge intercept of copper equivalents, unloved in Peru. We move on to American Eagle Gold. Okay, so this is a really interesting one because they're only up 1 or 2% in 12 months. They are cashed up. They've got S32 in there. They've got Teck in there. And I was chatting with Stephen Stewart about this, is that every time they put out a good result, the share price has run up a bit because people are expecting the news flow, but then it gets sold off. And it's a classic buy on rumor, sell on fact. But I think they're being oversold each time that they get sold off. Because if you look at the volatility, if you look at the amount that they get sold down, it's more than with other stocks. I don't know what people are expecting, but if you go through the geology, for 93 Canadian dollars, I mean, what's that? $60 million US these days. And if you do their EV, because they've got whatever it is, 27 or $37 million of cash, I mean, it's quite extraordinary. But they've lost the momentum. So they haven't moved in 12 months. But the geology and the market cap is still fantastic. Yeah, I mean, if you go and look at those cross sections, it's pretty impressive stuff. The next one on this page is AMARC Resources, or AMARC Resources, company I've never met before or never heard about. It's relatively new. It's come out strong. It's gone up 6 times. The share price has gone up 6 times. You can lock in kind of 555% gains if you sold today, having bought a year ago, just 1 year. They've got a pretty chunky market capitalization of $168 million. You're basically pretty much double the American Eagle Gold one, and these guys have just come flying out of the blocks. They've got 3 projects, Duke, Ike, and Joy, and it's Joy, or the Aurora project, which is the kind of the lead one. Really good grade results. They've got some pretty serious shareholders. I don't know the company, but I just thought, wow, that's quite impressive. That they've got momentum and they've got grade. I can't remember what the cash position is, but they're well backed. So that's a really interesting one. The website, I do remember the website looking a bit old school, but that's okay. Right. I moved on. So we're now going from 224 grade width down to 113 on this page. Still really, really good results. Anything where you get over 100 is kind of a proper director's hole. A company I've never heard of, Midnight Sun Mining. It's an Aussie company. I think they've got, I think it's relatively new, and they picked up some good ground, and they put in this fantastic hole. So I was like, wow. From 13 meters, 21 meters at 10.7% copper. And so I had a look at it, and it's $136 million. So it's not crazy price, but they buried in the news release, they talk about it being, this intercept being a transported occurrence at Kasiba Dome in the Dumba project. And in the Kasiba Dome, and they drilled underneath it and they couldn't see a continuation of the geology underneath. So they're doing regional work to try and understand where this fantastic grade comes from, but they can't find the roots of the system just yet. And they've got cobalt metals earning in $15 million into another project. So interesting bunch, but unanswered questions, and it was enough for me not to want to put it in bold, should we say. But I don't know enough about the projects, but that was just the first glance I had a look at them. So do your own due diligence if you're in Midnight Sun Mining Corp. Then we come to Hercules Metals. This is really interesting because they've really lost momentum. They're down 37% from the peaks of last year, but the geology is still there. The market capitalization shrinks, and so every day it looks like better value, and the treasury is still good. And then they're pulling out a hole like this, 300 meters at 0.7% copper equivalent. And I went to the news release and I had a look at the cross sections, and they've got this thing dipping this way, and the soil normally runs off to the east, and it's a big system. It's a big system. I think it's going to take time for them to work out the geometry and the exact shape of this. It's going to take hard exploration to get there, but it's a really big system with a lot of copper there. And they've got the geophysics, and they've got Barrick assisting them, and they've got the balance sheet. It kind of slightly reminds me of what Fitzroy will be consolidating when we complete finally the acquisition of Buen Retiro, which is a huge footprint with copper everywhere. When it's bleeding out of the rocks, even if it's not straightforward on how you drill it, it's just very encouraging as an exploration geologist to find that you're in a project with such good stuff sitting there. So Hercules gets made into bold, and bless them, they had to change the name from copper to metals because it was silver beforehand, but they keep on finding copper. So just another reminder to directors out there and anybody, do not put your metal name into your company name because you never know what you're going to find. But there we go. Having said that, we come straight on to Marimaca Copper Corp, because they really have got copper. In fact, I think they changed the name after a long development line on the project. So the project had been going for a while. I think it was called Coro or something before that. Anyway, Marimaca has been going like a Boeing recently, of the old-fashioned sort, not the crashing sort, up 55% this year, or in 12 months, and past 12 months. And the share price really picked up in September after the acquisition of Pampa Medina, or the signing of Pampa Medina. And what they're doing now is they're studying the PEA to bring in, to create a heap leach project at Pampa Medina, and then a pipeline, and then just pipe in the pregnant leach solution to the Marimaca oxide copper project, which is forecast to produce 50,000 tons per annum. So they're looking to kind of increase production to 75,000 tons per annum, and that would give them a mine life of I can't remember whether it's 12 years or 20 years, and they're looking at doing the kind of more exploration to extend that mine life to kind of keep it running at 75,000 tons per annum for longer than 12 years or longer than 20 years or whatever it is. But that is work in progress. They are going full gas on that. And remember what I said about, Winu being a 33,000 ton per annum copper producer with 80,000 ounces of gold and being valued today at the PEA level at $750 to $800 million. I mean, this is, and also if you look at Capstone at $6.5 billion with 180,000 tons of production. 75,000 tons is not that far. Could this be a $3 billion company? Hayden will probably want to take it there. This definitely deserves to be in bold. Really, really exciting stage, and particularly they've got Soar Holdings, they've got Mitsui in there, they've got cash. Boom! This is they're going full gas. Right. Okay, Q Mines, an Aussie company that hit 187 grade width, 114 meters at 1.64. I thought, wow, that looks like an incredible intersection. $18 million Aussie, so what's that, 10 million US. I went and had a look at it. They have no momentum, and it was a really busy story. I couldn't kind of work out what they're doing. They've got a small PFS. They're now doing brownfields exploration. Is it a greenfield story? I just thought it was a bit too complicated. So despite the good hit, I passed, moved on to Firefly. This is Steve Parsons and the boys, $545 million. Another great hit, 58 meters at 3% copper. It's copper equivalent. They've got two kinds of ores. They've got the VMS, and they've got the footwall zone, which is lower grade but wider, perhaps suitable to bulk tonnage development. And the VMS is tighter loads but higher grades. They've doubled in a year, so they're 104% in a year. They've got 6 rigs on site. They've got $84 million in cash. There's going to be plenty of news flow coming out of this. It's got momentum. They're onto something. They got 35 million tons at 2% copper equivalent. They're going to be flying. So watch this space. Benton Resources. I know I covered a lot of their results when they were putting them out 12 months ago, 15 months ago. Their share price has come off in the last 12 months, like many juniors. They got good grades, but there seems to be doubts about the scale, about their focus, and about cash. The last figure I could see was about $3 million. So they've got to, I think, address scale and focus and cash and see what happens, and think and improve their balance sheet and really start putting together some tons. They've got the grade. So there we go. On to Hot Chili, another company that's not got momentum in its favor. 26% down over the year. They've got some good results out of La Verde, which is where the green one, which is where this comes from. They've got 308 meters at 0.5% copper from 46 meters. So that's good. Their main project, integrated project, is large. They've got for a project this large, having a 21% IRR is not bad. And presumably it's on some kind of slightly old data. And their CapEx figure, $1 billion, maybe it's $1.5 billion. Perhaps that's what the market is saying, is the market is not backing the company. If the market believed that this project was going to get built by Hot Chili with the current management team, that figure would be different. So even this great exploration result didn't really look at the share price. If you look at the share price, this exploration result barely registered. It didn't even pop. So I don't know, maybe they can unlock the financing of Costa Fuego by doing a deal on the water license, or maybe they can pull out some more stunning exploration results to really kind of get a wiggle on the share price and rekindle that momentum. But it's kind of stuck in a negative iteration. But there we go. It was repeated because of the Aussie and the Canadian listing. Double View Gold, low grade in BC. Next, Ivanhoe Electric, low grade but with $1 billion market cap. Next, Brixton Metals, ditto, years doing the same thing, low grade. Aris Resources, $150 million market cap, Aussie that is. They've had a good year and they're a producer, but they've got 5 operations, so they must all be tiny. Having said that, that's a good width and grade, so that's a good drill result. But you know what I like, what I think about multiple small producers is multiple big headaches. Right, next. The next page goes from 107 down to 83 in terms of your grade width. Faraday Copper Corp. This company's never really kind of lit my fire, just in terms of grade. But when I went and looked at the presentation, the team has been there for 4 years, and hats off to them. They've done a really good job. The share price is up 50% in 12 months, which is a really good result in this market. They keep drilling kind of new breccias and things. They've got the Banjo breccia and American Eagle. They keep getting results. 0.35% copper. It's tough. It's tough. But they've got 30,000 meters drilling, which isn't included into the initial MRE. So they've got, and they're going to keep drilling until the end of Q2, and then they're going to do a data cutoff, and then we're going to have a new MRE and a new technical report coming. So it could be good. I put it in bold, just kind of as a mark of respect for the work that they're doing. Question mark about the grade and what the capex will be, but if you live in a glass house, you don't want to chuck stones. These guys are working hard and doing well. Hillgrove Resources Limited, another Aussie, $90 million, down 37%, 12,000 ton per annum, a deep underground gold mine in Australia. It's just like, oof. These are mine grades, sure. But next, Orb Minco, microcap, Mongolia, deep, low grade. Whoa, my goodness, I've been jumping around. Where are we? Yeah, microcap, deep, low grade. Next, Hot Chili we've covered. Okay, so I came to OzQuest. This is interesting. They've jumped 3 times. The share price is actually 4 times up over the 12 months. The Cangallo porphyry in Peru, 304 meters at 0.3%. I mean, we've got plenty of those kinds of results in at Buen Retiro, which, well, we're looking for the stuff which is twice that grade, and we've got plenty of those as well. But anyway, so their market cap's $45 million. They've had a jump on these results. They've got a huge portfolio, and if you actually go and look at their presentation, it's a bunch of geos and projects, and there's like they've got geological skills coming out of their ears and projects coming out of their ears. So chapeau for their technical work. And Cangallo does look as if it's got legs, but I had to give it a pass. And then we come on to Copper Fox Metals, $142 million. Oh my goodness, the website is seriously old school. They're tight on cash. They've had a good year. They might continue to do well, but it didn't inspire me. Right. Terry Lynch and Power Nickel. Look at them go. $309 million, eh? They're up. Their share price is up over 6 times this year. I mean, I think I picked them as a winner in a kind of a stock picking competition. I think I picked them in 2023, and they didn't do any well. But I was too early. I spotted the geology, but I was too early. But never mind. And Terry's kind of made this big hoo-ha about the share price being squashed by naked short selling, and he's kind of created this huge drive to try and stop the naked shorters out there. But guess what? When he started hitting good results, the share price went up. So I think that the cure for low share prices are generally hitting stuff and having a strong balance sheet. Right, and they've spun out their Chilean assets. They're another classic example of why you should never put your commodity into your project name or your company name, because you don't know what you're going to find. So Power Nickel is now a terrible name for this company, because the economics are being led by copper, even though there's still nickel in there. There are PGEs and there's silver and gold. You don't need to call it by the metal that you're exploring, because Apple doesn't make apples, and Google doesn't make googly eyes. You don't need to, and when will the resources sector get it? Anyway, never mind. It looks like a big system. They've got orthomagmatic, copper, nickel, PGE, silver, gold. These things have got scale. The market is rewarding that. They're hitting some high grade, 20 meters at 4% copper. Yes, it's moderately deep, but it's probably just kind of intersecting something which is going down. Great project. It's got potential to go higher than that. And so despite the name, despite the fuss about naked short selling, this company should do well. I know it's had a good run. You might want to take some profits, but if they can continue to delineate the scale potential of this really now comes down to scale, because they've proven the grade. If they can show that grade continues over big scale, then that number is going to go up. I haven't looked at it in detail. Just those are my basic observations. Okay, on to a new one. Look at this, Teck Resources. They put out a drill hole in December, in the middle of December. $20 million market cap Aussie. So what's that? Kind of 12 million US. Up a bit. They've only been going. They're in Nuco, they're in Peru. They've got BHP Explore, and they've got a VMS in Newfoundland. And they raised $3 million, or they're doing a $3 million raise. I'm not sure. I can't remember which. And Rob Jewson is involved. And he's an Aussie, Perth-based geologist, promoter. So he backs serious geology, good teams. I think this could be quite fun. I haven't looked into the geology. I don't know enough about where this 23 meters at 3.7% comes from. I think this is in Newfoundland. So that could be good. There's always the problem in Newfoundland of structure, because it's such a mature terrain. You've got to really make sure that these things have got lateral and down plunge continuity, because you can get good grades, but you can be like Newfoundland gold, which is just drilling every 2 meters, and you can't predict where the grades are, because it's just so hectic. One to watch. Go and do your due diligence. But these guys, Rob Jewson et al., can move things, which is good fun. Trigon, I've talked about small production in Namibia before. The market cap is telling you that then their balance sheet is suffering. They didn't even give you the depth on this. So next, Carnaby Resources, an Aussie company. Look at this, down at 558 meters. They drilled 12 meters at 6.8%. They've got quite a decent market capitalization. The momentum has gone. To me, it feels high grade, complicated, but potentially interesting. Lots of due diligence needed. These kind of plunging shoots of high grade mineralization. These lodes, and they've done some EM surveys, and you've got these conductors, these geophysical conductors. That we've seen this before in Canada. It can work, but it's quite tough. Anyway, more due diligence needed. It didn't make it onto my bold list. Then we come to AIC Mines, another Aussie company, $216 million Aussie. Again, quite deep, 13 meters at 6.3%. They're a tiny copper producer, tiny gold producer. Commodity prices have obviously helped their economics this year. I've got a question mark over scale, but perhaps do your own due diligence on that one. Right, we're getting there. Is this the last one? Oh my goodness, we've got 2 more pages to go. Hang in there. Alma Metals, micro cap, no trade, huge low-grade resource. Next, Surge Copper, low-grade retread. Next, Quartz Mountain Resources, the Bob Dickinson show. I don't know who he is, but he owns 50% of the company. So it's tripled in the last year. So you've got 260% profit or book gain. Looks like low-grade to me in British Columbia. If you like Bob, you might like this. XXIX Metal Corp, 29 Metal Corp. So they've gone, another one that's gone for the atomic number. Really, names shouldn't be that hard to find. It kind of makes me sad that boards of directors can't come up with the name of a company. But there we go. It's the old QC Copper company, and that was the old Quebec Copper company. Again, this is a company that really struggles to find names. The old Opimiska, microcap, it all comes down to the town and the planning. So next, Golden Arrow Resources, microcap in Chile. They've got some interesting ground actually between the Capstone Copper projects of Monteverde and Santo Domingo. Sumitomo held it for a long time but gave it away. So maybe that tells a story in itself, and it seems to be low grade. Sandfire, I didn't write anything about this. I don't know why, but they're a huge company and this is deep. So it's not going to affect, it's not material for us. Right, Orion Minerals, flat on the year, very thinly traded, and they've written this thing in their copy, starting small to grow big. So they've got plans to produce from a small lead copper mine called Priska, a small copper mine called Okeep, and Yakama span nickel and copper, which is low grade. And it's just like, oof, that all feels difficult. Incidentally, I was underground at Okeep. Was it Okeep? Yeah, I was underground at Okeep about 30 years ago. And I was wearing a hard hat, and a lump of chalcopyrite and bornite fell off the roof and hit me on the head and kind of knocked me over. And the South African geologist, the guy, yeah, man, he couldn't tell mineralization if it hits him on the head, eh? Which we all found hilarious. And then we went up and had a beer. Right. Next, GSP Resource Corp, illiquid microcap scale challenge. Next. Okay, this is an interesting one. Southern Hemisphere Mining Limited. They've got a $27 million market cap. They're in Chile. Yawin is the name of the porphyry. 0.41% copper. Quite a good intersection, 128 meters. Quite low grade. But they've got 0.29% copper, 0.12 grams gold, and 80 ppm moly. Sorry, that's their resource already that they've got. They're 149 million tons, and that's probably not quite economic. It's up in the Andes. It's quite high. What's the cash burn going to be? Right, next. Prospect Resources in Zambia. These guys, $55 million market cap. They're doing okay, bit of momentum. But when I looked at their news release, I couldn't quite see what they were up to. There was a kind of a corridor, there was a project, there was a resource. So I gave it the skip. Abitibi, still don't want you to look at their presentation, so immediately give it a skip. Centaurus is a nickel and iron company in Brazil. Battery Mineral Resources, Chilean company, well, in Chile, but they've got their Punitaqui project, but actually they've tried to start the mine. They can't do it, and so they're just toll treating around it. So this is kind of scratching around the edges. So next, we come to Gladiator Metals, $38 million market cap Canadian. They're in the Yukon, but look at this, up 49% in the year. They've got, I think they've got $18 million in cash. Is that why I put that there? Oh, and in their copy, they talk about initially targeting over 100 million tons of high-grade copper resources. If you go to the Cowley Park project, this has got mineralization everywhere. It's got copper, gold, moly, silver. They report their grades beautifully. They report the copper grade, and then they report the gold, and then they report the moly, and then they report the silver. No copper equivalents. It's serious stuff, as I would expect from Colin Jones, who's either non-executive director or technical advisor. They're drilling 10,000 meters in the first half of this year at Cowley Park, and another planned 9,000 meters in the second half. This is going to motor. It's going to motor. So that gets into bold. Right, where do we come to? Sierra Metals, $183 million market capitalization. They've got their noses above water this in the last 12 months. They produced 20,000 tons of copper, 20,000 tons of zinc, and 16,000 ounces of gold in 2024. Next year, they're looking to incrementally increase the copper, expand the zinc considerably, and drop the gold. And I just feel that they've got two mines in Bolivia and, in Mexico and in Peru. The Bolivar project is in Mexico. It just feels as if at that level of production, it feels as if they must be capital constrained. And sure enough, when you look at the where these mines are, they're all deep development. So you've got the costs, you've got the heading issues. How do you increase production without increasing your burn? So that seems to be the problem there. Copper Corp, no trade in the year. Tasmanian rare earths. Next. Cygnus Metals. Now, this is interesting. They've got a market cap of $110 million. They've got an Aussie listing and a recent Canadian listing, hence they're on here twice. This is deep, but 7 meters at 4% copper is a kind of a decent hit. If you go to their website, they've got these kind of the placeholders of their team. No photographs, which is a massive red flag, really, because what else are they not looking after? Shibugamu loads, small tonnage, didn't make it for me. Right, we got there. So, in conclusion, I feel that the companies that are getting the market attention and will continue to get the market attention, the ones that are loved, have got large-scale exploration potential. They've got momentum and news flow, and having a strong balance sheet or access to capital helps. So you don't need to have a huge amount of cash as long as you know that the company can raise money. To be in that process of discovery is alpha generation. It's value through the drill bit. And if you're not necessarily discovering stuff, but you're heading towards production, then to have the possibility or the prognosis for low capital intensity in your production is going to drive value, which means that you can get it financed. So it means not having a huge capex relative to your market capitalization, because when your NPV or your capex to value gets completely out of whack, then it just basically says that the market isn't backing you or the project or the management team. So what is unloved? Capital constrained small production. I've seen that. Just run through the valuations and the annual performance. Exploration results that are deep or narrow or small, or projects that are deep or narrow or small. Balance sheet constrained exploration and development, and that I come back to, kind of a big capex, $1 billion capex versus a sub $100 million NPV. Market capitalization. It's just that ratio which is too out of whack, and multi-year lack of momentum when you haven't been able to convince the market, when it just hasn't run, then it's almost time to just say, you know what, I will go and do something else, or we'll look for a different project, just like Discovery Silver did taking their kind of low-grade marginal silver asset and investing in Porcupine and Timmins, Ontario, buying the Newmont non-core gold assets. You just got to think outside of the box. So, but here we are. These are the list of the companies that I put in bold from big to little. Now, the little guys, sub $100 million, these 4 have all got momentum. They're all pure exploration, and they've got backing in this. They should do well. I've kind of Hercules and American Eagle are kind of in blue here because they don't have momentum. They've kind of lost the market favor, but they've got cash. They've had strategic investment, and they're going to be drilling like Bilio. So I think they're going to regain the momentum. Faraday's got these. They're kind of rejigging their economic studies. This is the one I'm kind of the least. It's the most complicated one because you've got more moving parts, and you're getting into that slightly dangerous zone of the Lassonde curve. So go into Faraday with care because of that Lassonde curve impetus or lack of impetus. The bog, power nickel, or will it be called power copper next week? I don't know. And AMark and Firefly are all exploring, and they're all looking to kind of get up that value curve, make it into a kind of a $1 billion asset. ATEX doing exactly the same. They can see the valuations of NGX and Filo, and it's in Chile, of course, not even in Argentina, so it should actually get a premium rating, not a discount rating. And NGX has got the Lundin rating, and plus those spectacular grades. I haven't mentioned Marimaca, but they've got the exploration juice. But they've got the real powerhouse is the fantastically low capital intensity of the oxide production and the incremental 25,000 ton PEA study that's going to come out from Pampa Medina to the Marimaca oxide copper project. So there we go. Of course, Fitzroy Minerals has just drilled 186 meters of sulfides. When we get the assays back and all of the duplicates, we've validated it and we've checked it, I hope that we will be adding ourselves into this list. Our market capitalization at the moment is currently about $27 million Canadian, but pro forma it'll be closer to $40 million Canadian, but hopefully with 2 cracking projects that we'll be taking forward in 2025. So thank you for sticking with me through this copper bottomed. It has been a long one, but it's been fascinating for me to study just the discipline of going through those news releases and these exploration results. I'm going to try and do this in a couple of weeks so that it's a shorter version. In fact, I might do one post PDAC, but very good. Thank you very much. See you again.